Good afternoon. This is Tom Asbury with the Viper Report for Sunday, March 1st. It was definitely a week that the bulls got gored. For a number of weeks, actually going back into January, I have been really concerned about the stock market, as a lot of things I follow suggested it was in a high risk area to be a buyer. The bulls have been winning so far in 2020, but last week it was not the case. This table shows some of the damage, with the Dow Industrials down 3,583 points, 12.4%. The market-leading NASDAQ 100 got hit over 10%. It's now down for the year to date. Not much help for the S&P, down 11.5. Even gold was dumped towards the end of the week, as were the utilities, which yield considerably more than the 10-year notes, which closed at a historic low. A couple of weeks ago, in my Forbes.com piece, I talked about a historically overbought market. There were a number of things I was looking at, as I mentioned last time, including the fact that the QQQ was already up 10.3% year to date, which was a better yearly performance than it did in 2011, 2015, 2016, and 2018. It's now down for the year. In the Viper Hot Stocks report the next day, I featured this chart, which shows one of the indicators I use to determine high and low risk. On the green underneath the bar chart, you'll see that it's a plot of the number of stocks above their 50-day moving average. So when it gets above 80, and particularly when it starts to diverge, it did in May for the May correction, also in July before the August correction. And in this chart, you can show that it's been up above 80, dropped at the end of January, rebounded, but still was looking weak and diverging from prices. That meant that we should wait for a drop into the low risk area. The other thing I pointed out was the fact that the QQQ was above its weekly Stark band and had been for about 8 of the last 9 weeks. You can see up till last week's action, it was still testing it, even though it closed lower. And of course, this bar represents this week's action, as it dropped all the way down to the support level that we'd broken out from in 2019. My other concern about the market was that I felt that we didn't have enough data on the impact of the coronavirus to determine whether the very high stock prices were justified, as the major averages continued to make new highs. That was somewhat resolved by last week's sharp drop, as the markets got hit very hard, but still we do not really have enough hard data, which is what I base most of my analysis on, to determine whether the coronavirus will impact earnings going for the next quarter or for the whole year. That's still an open question. In this week's post on Forbes.com, Are the Wall Street Strategists Wrong? I go through the technical and fundamental analysis that I use to determine the market, and think that maybe the Wall Street analysts have gone from being way too bullish to now too bearish. It was interesting on one of the financial networks last weekend, no one was interested in buying Apple when it was below 275. It actually got below 260. I tried to recommend it briefly, took about a 1.5% hit and was out. But I think I was really surprised that none of those folks were interested in buying it now, but they were very bullish above 300. So in this week's article, there's a link in the email. You can read all about it. We talk about the market's condition and the fact that the QQQ had reached the yearly R1 pivot resistance already this year, and it's actually dropped back towards the yearly pivot, while the S&P, or the Spider Trust, has dropped below that yearly pivot. That's sort of the focus on for the week, and you can see what's happened to that percentage of stocks above the 50-day. It went from above 80 to now at 10. So it's getting back in the low risk area. Hasn't really bottomed out yet. You can see historically, it can spend some time down here. So we'll be looking for an upturn here to suggest that possibly the worst of the selling is over. It's also an encouraging sign that the QQQ has dropped into these converging support levels. Look at the article in Forbes if you want to read more. Of course, depending on what news we get overnight, we could see another push to the downside, but I think there's a good shot that last week's late lows will hold. If you're interested in specific recommendations and a regular update on the market, I hope you consider one of my premium services. As it turned out, we had updates every day last week. And on Friday's report, I identified some support levels in the futures that I was looking at as a barometer for Friday's action. And when things get crazy, like they definitely were last week, we do regular daily updates often. Keeps my schedule kind of busy. Typically, as part of the services, you get 2 updates a week. But I understand that my clients need regular updates when the Dow is dropping 1,000 points. So if you go to viperreport.com, you can sign up for the Viper ETF report or the Hot Stocks report. And we'll touch base with you later in the week. Good luck this week and fasten your seatbelts. It could still be interesting.